What's going on, guys? Today we are going to talk about one of my favorite stocks in the stock market right now, and that is Alibaba stock. And we are going to go over the earnings. We've got some earnings coming up on February 25th for this stock, and I think it's going to be a very interesting earnings call. So we're going to go over what I'm kind of expecting from those earnings, what analysts are expecting, and basically then we're going to take those and look at the PE ratio and use the PE ratio to project where we think this stock could be headed over kind of the next year. So I hope you enjoy the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. All right, we're going to start by looking at Alibaba's chart. So here we can see that Alibaba on the day on Friday was down almost 1.5%. Over the last 5 days, they've actually snuck up quite a bit. They went down into kind of the lower teens, and they've shown some support there in the past of just basically bouncing off kind of those around 110 kind of mark. And we can see that kind of similar trend here. They snuck down to kind of 111, it looks like, in here, and then bounced up. And over the last 6 months, that's kind of where they've been ranging at. So they've been ranging kind of down at the 110 mark, and then bouncing up kind of all the way up into the 130s, and then back down. And that's kind of been the trend recently. But really what we're seeing here is Alibaba is down almost 37% over the last 6 months, and a lot of that has to do, basically they had a poor earnings report back in kind of February, and throughout the year there's kind of just been a negative sentiment towards their earnings, and then also towards Chinese regulation of these stocks, potential delisting of these stocks. We've kind of seen everything that you could possibly hate to go wrong with Alibaba being brought up over the last year, and that's resulted in basically the price falling over 50% just in the last year. So in terms of overall earnings, a lot of analysts that I'm kind of seeing are expecting an EPS of $2 to $2.50. So overall, kind of the range has been actually closer to 225 to kind of 240. That's actually lower than it was a year ago, and basically a lot of that comes on the back of what we just talked about, where there's just kind of a negative sentiment towards Chinese stocks, also supply chain issues, inflation, all of that kind of going on. So overall, there's not a very good outlook on earnings. Personally, I think that's probably on the low end. I think you'll see a number close to kind of the 250. But revenue is where I'm kind of more interested in, because what we're seeing here on these charts is this is revenue over kind of Alibaba since they went IPO, basically. So what we're seeing, and what's really interesting to me, is their trailing 12-month period. So we can see that basically every quarter that they have announced revenue, their trailing 12 months has increased, and very, very significantly over basically 2021. You can see that their revenue went up by quite a bit. The kind of weird part, right, is right, their revenue is increasing, but their stock price is going down. And again, a lot of that has to do with just the overall sentiment towards the stock. I mean, if the stock gets delisted or were to get delisted, then obviously a lot of people are concerned. You can only then kind of trade it over the counter and not over kind of major indices. So it just becomes kind of a negative sentiment game. But overall, when you look at their growth, right, they're seeing basically great growth. I wouldn't be surprised if this number is kind of similar to what you're seeing here, basically around 125 to maybe 135 billion dollars. Overall, that's still a positive number. I mean, you can see from here kind of over the last 2 quarters that it's increased almost $10 billion. I wouldn't be surprised again if you see something similar over this next earnings report. I mean, you have the Christmas quarter, you have a lot of kind of positive things going for the stock that would result in it to potentially go up. But overall, we'll have to kind of wait and see where things come in. The bigger thing that I'll be looking for in earnings is how are they guiding forward? Are they guiding forward that basically this trend is going to continue, that they're going to continue to increase their revenue, or are they kind of more worried about supply chains? We saw kind of 2 conflicting messages, right? A lot of Facebook, their earnings was very kind of negative in the sense that they didn't guide very positively in the forward direction. And part of what they pointed out was supply chain issues, inflation issues, and whatnot. But in contrast, a UPS and an Amazon and even Apple, they looked more kind of on the positive side and said that they see things turning around. They are not having as many supply chain issues. So really what I'd be looking for, and personally I think Alibaba falls more into that group of UPS, Amazon, Apple, I think they're more comparable to those. So I'm hoping that they kind of present more positive news, more positive outlook on the future, and where kind of those things are going and how they're going to affect their business. I wanted to talk about this chart real quick because it's very interesting to me that you almost have a split here in kind of different valuations of Alibaba stock. So it's looking like, right, so here we're seeing October 9th of 2019. So before that time, Alibaba had a very high valuation. You're seeing around a 50 PE. I mean, it kind of was trending down here kind of in 2019. But overall, right, the valuation was relatively high. This is actually very comparable to kind of Amazon and kind of where its stock has been at. So overall, it was being priced similar to Amazon and probably rightfully so. But in the last kind of few years, we've seen a different trend, right? So we've seen Alibaba actually kind of fall off in terms of valuation, and there has been a lot of negative, basically, market sentiment towards Chinese stocks over the last few years, which kind of plays into it. But overall, you see the stock actually sitting more kind of around a 25 to 30 PE ratio in here throughout this time. There's a little bit spike up in here, which we'll kind of talk about, but overall you can see, right, so what I want to look at is a chart for October 9th. So when we go back and actually look at October 9th 2019, that's kind of right in here. So what you're seeing, and again, this is very interesting, is basically the price in this time, basically before this October 9th, we saw the price sitting relatively kind of low to what we've seen over the last couple years. So overall, right, basically Alibaba was being valued like it had a lot of forward growth. And then kind of ever since then, it's actually been valued, even though the stock has ran up quite a bit, it's been valued significantly cheaper, except for right in here. This is where we hit that kind of spike in the PE ratio right in here, where it went back above kind of 40. And again, earnings obviously affects this, so it looks like they probably had a poor earnings report. So as earnings go down and if price stays high, then your PE ratio is going to go up, right? So what's interesting is, right, the PE ratio is low kind of throughout all these time periods, which tells me, right, earnings are increasing kind of actually right in here because the stock price is increasing. So from October 11th, again, and you can kind of see the stock price is actually running up throughout there, and the PE ratio is actually going down and kind of staying down. So it's very interesting, right? Because basically, again, that's telling you that Alibaba is having positive growth in terms of its earnings, and its stock price is reflecting that. But then overall, right, you're seeing a pullback just because of basically the sentiment towards the stock, even though the earnings are trending in the right direction, right? Again, as the stock pulls back, earnings could be staying constant, but the PE ratio is basically dropping, which means you're just buying more earnings for less money. So overall, kind of a positive thing. So next, let's jump into kind of some projections based off these PE ratios of where we think the price could go. All right, so what we have here is basically we're going to try and project the price of Alibaba stock, what we think it could be in the future based off what we've seen for PE ratios basically over the past. So what we're looking at, right, we have the price of Alibaba, the current price, which is $122.25. We have the current PE ratio, which is 17.45, which we're pulling here from Yahoo Finance. So this is the trailing PE ratio. And then what we're projecting is what do we think the PE ratio could be basically going forward. So what I'm looking at and where I'm grabbing these numbers from is when we look at this chart, we're seeing that Alibaba kind of has some stability. It looks like around the 25 PE ratio, but it's also gotten up to 30, it looks like, in the past, right? We're kind of seeing 30 in here. And then the final number that we looked at is where's the average over the past 5 years. The problem that I have with this average of 36.77 is it's taking into consideration basically this higher valuation. I don't think that's impossible, right? We're still seeing Amazon valued at a 50 PE ratio and higher. And I think Alibaba actually has potentially more growth than Amazon. So I don't think this valuation is out of the question, but I definitely think compared to more recent market sentiment that we're seeing in here, I think it's a little bit on the higher end. So let's check out basically where the price target will be if the PE ratio were to go back to these levels. So the first level we have here is 25. So if the P ratio were to go back up, basically everything kind of stay constant, but the P ratio, the price go back up and the P ratio go back up to 25, we would see a price of $175 and 14 cents, which would represent a 43% return on your money, which is excellent. And it basically only gets better from there. So what we're going to look at here is if it were to go back up to 30, which again I don't think is unreasonable. So there we would have a price target of $210.17, and that would represent a return of almost 72%, which again is extremely basically outstanding. I don't think this is unreasonable, especially even over a year time frame. So here is a more basically out there representation, right? I think a couple things have to change. I think market sentiment has to change overall towards Alibaba stock, and I think it has to be valued a little bit more rich than where it's kind of been over the past few years. So here, if this happens, and the P ratio goes to 36.77, we would have a price target of $257.60, which is a 100% return. Again, I don't even think this is necessarily unrealistic. I think there's just a few things that have to change. If we actually go back and look at the chart, right, we can see that Alibaba was even up to $300, over $300, just in the past 2 years. So I don't think this price target is even unrealistic. I think it could easily even go higher than that. I think there's just a lot of kind of small things that need to change within the market. And the last thing we have up here are different price targets from analysts. So analysts basically are looking at price targets. The average is $188.79 with a high estimate of $250 and a low estimate of $240. So you're kind of seeing that range in here and where that is kind of compared to the stock. So what we've done is looked at that average here and basically given a return to it. So what we're seeing, right, if it goes to $188.79, we'd have almost a 55% return on your money. And that estimate is actually compared to kind of relatively close to our price target at a 25 P ratio. Like I said, I think that's relatively conservative in my opinion. So I think there's a lot of upside in this stock. I think there's a lot of potential that you can get in now and basically, you know, make up to 50%, I think, relatively easily within a year. Obviously this is considering things going well for the stock. If earnings come out and there's relatively bad news, then you could see kind of a different trend, obviously. And obviously if earnings fall through the floor, then all these numbers kind of are affected significantly. Personally, I don't think from looking at the charts that Alibaba will have kind of poor earnings. I think they'll be relatively kind of stable. The real thing that I think will affect the stock price over these earnings will be their forward guidance. How are they looking forward? Are they seeing positive trends in the market, or are they concerned about basically supply chains, interest rates, things like that? So overall, it'll be a very interesting earnings report on the 25th. Right now is what it's scheduled for. So I'm definitely going to be paying attention to it, paying attention to where the stock's going to be moving. Overall, this isn't financial advice. Obviously, make your own decisions. I personally own Alibaba, so I do have a biased opinion towards it. But obviously, look into stocks, kind of look at the numbers, see what your personal feel for it is. Overall, I hope you enjoyed the video, and if you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Otherwise, have a wonderful rest of your day.